Hey everybody, Nico here and welcome to the Trading Setup channel. The crypto market is the real wild west. Extreme volatility, no regulation. One single move can either double your account or wipe it out completely. In this video, I'm going to show you how to tame the crypto instruments and use them to your advantage. Before we start though, I've got a gift for you. In the description below this video, you'll find the link to my free traders chat on Telegram. Inside, you'll find daily trading hacks, proven tools for crypto trading, secret indicator settings for crypto, and a useful library of materials in the pinned messages. Just click the link in the description below or scan the QR code on the screen. There are already traders inside who are ready to grow. And now it's your turn. Let's get our platform set up so we can start trading. Today we're going to be using one of my absolute favorite all-time strategies. We're going to need two indicators for that strategy. It's going to be the RSI and the stochastic oscillator. I'm just going to make some visual changes. We're not going to change any of the settings of these two indicators. We're going to use them on default values. I am going to change, just a little bit change how it looks. But other than that, we're not making any changes. There we go. Okay, so we're going to be using divergence today, and I'm going to hopefully we're going to see examples of the different kinds of divergence. There's 4 types of divergence. You get normal bullish, normal bearish, hidden bullish, and hidden bearish. Now, the normal divergences are reversal signs or reversal signals, and hidden divergences are continuation signals. And hopefully we're going to be looking. Hopefully we'll find examples of all of them while we're going to be doing this. But let me show you 1 or 2 examples of the different divergences. I just need to find some. Okay, so we've got, it was almost, but it's not very clear, so let's skip that one. I've seen a few examples now that I would have taken trades on that are valid, but not the best. Okay, so here's an example of hidden divergence, hidden bullish divergence. If I take this point in price movement here to this point here, I can see that price made a new low. It was a higher low, but it was still a low. So we made a higher low here, and then we made another higher low here. And we can see that these two lows are quite far apart. This one is significantly higher than this price here. So that's what price was doing. At the same time though, when price was making the first low, my stochastic came down and didn't even break the 50 mark. It was still above 50% and came back up. But when we made this low here, my stochastic went into almost oversold area. So this is, if I were to draw a line from that point to that point, that line would be facing downwards. This one's facing upwards. So that's hidden divergence. And we can actually see this on the next move as well. We can see on this move here, although this was very sloppy, this might have been a difficult trade, but still a valid trade. We can see that we had the exact same thing happening here as we had here. Price made a new low, made a higher low here, although it paused at this level for a little bit longer. But again, my stochastic made a new low from the previous low, so that's again hidden divergence. And this is hidden bullish divergence. Now, the exact opposite will be true for hidden bearish divergence. Let's see if we can find a normal divergence example as well. That was sloppy, valid but sloppy. I want to find a good example of, here we go. Okay, so we had this massive drop off here, and we can see that price, or the stochastic made this low, it came down basically to 0, stayed there for a while, and then price started pushing up again, and the stochastic followed. But then price made another drop, and we made a new low, a lower low from the previous one. But we can see that my stochastic did not make a new low. So we had, let's draw this in. We had this here. Let's draw it on the lows so it's clear. So we can clearly see that price came down to this point, pushed up and made a new low here, but my stochastic did not. So again, these lines are not, if I were to draw it in on the oscillator, it would look something like this. And this is why we have divergence. These lines, although technically, if you want to get really technical, this is convergence, not divergence. But in trading, we just talk about divergence. It applies to whether it's convergence or divergence. It's the same thing when we talk about it in trading. So these two lines are not running together. They will look like a channel. If you overlay them, the stochastic and price will usually the lines will be in the same direction, but in this case it wasn't, and that's normal divergence. And for bearish divergence, normal bearish divergence, it will be the opposite. We will see price make a new high, but my oscillators will make a new low. And you don't just have to use the RSI and the stochastic for this. You can use anything that oscillates. You can use MACD, you can use CCI, you can use Williams percentage R, anything that either moves between a set value, like the RSI moves between a set value of 0 and 100, or the CCI, which revolves around a 0 point. Those are the two different kinds of oscillators you get, and you can use both of them. Okay, so that's divergence explained in a very quick nutshell. Let's see if we can pick up some trades. We've got our platform set up and we're ready to look for trades. Okay, now that our charts are all set up, we can start looking for some divergence entries. And we might actually have our first trade here. I'm going to go for a buy here. So the reason I'm taking this is we have normal bullish divergence that formed on the oscillators, both oscillators now. Let me draw that in quick. We have this low that formed here, and we have this low that formed here. Although this is very worrisome, sometimes this will happen. Let's see if we get the push back. We had the low that formed on this stochastic, and on the first low was much lower than the previous one, although price made a new low. And we have the same thing that's valid for the RSI. We can see that the low that formed on the RSI there was basically on the 50 line, and this one here was much higher. Well, not much, but it was higher. We've got 20 seconds left on this trade. Let's see if it continues its push upwards. Remember, divergence, especially normal divergence, which is a reversal signal, doesn't mean that the trend will completely change. It only means that in the short term, we should see a price move, or we should see price move in a kind of like reversal. Okay, so even though I did take a buy here and I did get bullish divergence, I'm not going to assume that price is going to continue upwards and that we have a trend change from this downward trend here. That was one good trade. Let's see if we can pick up another one. The reason I love divergence so much is I used to tell people that I love divergence because it always works, but I soon realized that people thought that it meant when I say it always works, that meant that you will win every trade. This is not some magical strategy. You are going to lose divergence trades as well. The thing I love about it is that it's very consistent, and the reason I say it always works is that you will find divergence trades every day throughout the day. You will find it on different time frames. You can use divergence even on a daily chart if you're trading Forex, 4-hour or daily chart. You can use it on 1-minute charts or 5-minute charts. I'm using this on a 10-second chart because if I have to wait for divergence setups on a 1-minute or 5-minute chart, this is going to be one tremendously long video. Okay, so for the sake of this video, I'm using a 10-second chart with a 1-minute expiry. If you use a 1-minute chart, use a 5-minute expiry. If you're using a 5-minute chart, use like a 15-minute expiry. But you will always find divergence trades throughout the day. It's a consistent thing. And once you understand it and you got the hang of it, you will find that it is a very consistent strategy as well. But it will take some time for you to get the hang of it. I've seen people struggle with it for quite a long time before they understood it. Other people pick it up really quickly. People tend to struggle more with the hidden divergence than the normal ones. Even though, in my opinion, the hidden divergence entries are even more powerful than the normal divergence entries. Because hidden is a continuation signal and normal is a reversal signal. But that being said, let's see if we can pick up some more entries while we are here. I don't really want to go that low on payouts. Okay, so you will notice that we're not getting a trade a minute using divergence. Even on a 10-second chart, it's making us wait a little bit for decent entries. And this is going to be longer on a 1-minute or 5-minute chart. So be prepared to know that this is not a very quick strategy. It's very reliable, but it's not quick, as with all the other more reliable strategies. You will have to exhibit some discipline and patience and wait for good setups to form before you take your entries. When price is moving like this, and we have it flowing very nicely, making lows and highs and lows and highs, this is areas like this where you will normally find some hidden divergence forming. Right now we do have some, and as soon as the stochastic turns upwards, I'm going to take a buy trade. I'm just going to wait for it to actually do that, so I can draw the lows on the price and on the oscillator. So let's just wait for it, see what happens. We don't want to jump the gun. One of the mistakes I see a lot of people make with divergence is they will start to take trades where it looks like divergence is going to be forming, and that's not a good idea to do, because then you're moving from following the market to predicting the market. And I've said this so many times in so many different videos, it's impossible to predict the market. I don't think anybody can, that includes myself, but it's fairly easy to simply follow the market. Okay, so it turns out we didn't get divergence here. I was hoping that price would not break this low here where the last dip of the stochastic was, because this was otherwise a fairly decent hidden divergence setup. But because price broke the low, that means my oscillator made a new low along with price. That's not divergence. So we're going to start at the top again and see if we can pick up any nice divergence entries. What was this? Okay, so if price starts coming down now and my stochastic turns down without going higher and makes a bearish crossover, I will take a trade here. That's what we're looking for. Let's just wait for it to confirm. It's just a few seconds, and that might save us some heartache from, there we go. Okay, so this is a valid divergence sell. This is normal bearish divergence. Let me draw that in as well. Okay, so we've got this high here, and we've got this high here. So as we can see, price pushed upwards, did a little retrace, pushed up further. We broke the previous high, but, and as we can see on both the stochastic and the RSI, that the new highs that formed on the oscillators while price was hitting, making a new high, these two highs were lower than the previous highs on the oscillator. So that's a beautiful bearish, normal bearish divergence entry. And now we just need to wait it out and see what happens. There we go. So remember, divergence always needs a few candles to play out. So whatever time frame you are watching, give it a few candles just to play out. This is not something, if you are doing are trading off a 1 minute chart, don't take 1 minute expiries. Okay, because we are going with the flow of price. We're not this is not like something like a rejection from support. If you're on a 1 minute chart and you get a very nice support rejection, for example, you can take a 1 minute buy for the next expiry or for the next candle. And those usually, that's the way that strategy is very effective. But with divergence, you're going to need a few candles for the divergence to play out. So you want to leave a few candles. That means if you're like, I'm trading on 10 seconds, I'm doing 1 minute expiry, that gives me 6 candles. If you're trading on a 1 minute, do a 5 minute expiry. Always leave a few candles from the time the divergence forms to when your trade expires. I don't want to make this too long a video. Let's see if we can pick up another entry. Unfortunately today the payouts are not that awesome. So I don't have a lot of options here, a lot of assets to choose from. I do not like trading when on below payouts like this. This video is 10 minutes already. That's actually not bad. 10 minutes, we got 2 divergence trades. Okay, so it looks like we might have some bearish divergence setting up here, hidden bearish divergence. Let's wait and see what happens. I don't like the fact that my RSI is not moving, but we should get a sell entry Oh, that was too fast. I missed this. Okay. So when this is going to happen quite often, unfortunately as well, when you're trading, when you wait for divergence like I was waiting for my setup to complete, because on this candle here, it has not yet crossed over. We can see that the stochastic has not made a bearish crossover on this candle. It only occurred on this candle here. And but for when price makes a massive move like this, I don't take a sell trade, because quite often it will just bounce back. Even though it would, if you look at the history, it would you would see that the divergence was valid, but price on a big move like this, price sometimes pushes up to here, where I would have won the trade if I got in the turn, but I lost it because I got in on a massive downwards push and I got in too low. So if you see something like that happening, just skip the trade and wait for the next one. But hopefully you guys understand the concept of divergence now and how to trade it. This is one of the more common questions I get when trading or regarding divergence. People tell me, when do you know the exact time is to enter? And like I said, for me, I use the stochastic crossover to time it to time the entry. Let's get back to that trade we missed now. Where was it? I use the stochastic crossover to time the entry. So that confirms that divergence has formed on the stochastic. So a lot of people seem to struggle with that. They either wait too long or they don't wait enough time, and then divergence ends up not forming, or they wait too long and the move is not that big. Remember that, like I said, it's not a magic indicator or a magic strategy. It takes some getting used to. It's going to take some practice to get a feel for how divergence behaves. Sometimes you will get beautiful, clear divergence, other times not so clear. And that's something you're only going to start understanding with as time goes on and you gain experience by looking for divergence setups. But let's call it there, and I really hope you guys understand divergence and find this useful. If you want more, I have a private traders community. Every day inside, I run live trading sessions, share setups for crypto, and give strategies and indicator settings that I use myself. You can't get in through a link, only through direct contact with me. My contact is in the description below. But don't wait too long, spots are limited. If you're ready to join, text me. And don't forget to subscribe to the channel. There's more setups, practice, and real trades coming. I'll see you guys in the next video, and until then, may the pips be with you.